Assalamualaikum warahmatullahi wabarakatuh. We are from Group 4 and we will be presenting about company asset analysis. We have chosen three companies from oil and gas industries, which are Petgas, Petron and Armada. Now I will be presenting about the objective of this topic. The first one is to briefly describe about the overview of the company and to explain the reason for their selection and their relevance to the analysis of the PPE. The second one is to explain three key assets within these companies. Thirdly, to examine the subsequent measurement method used by these companies. And the last one is to explain how these companies use their PP assets to generate income.
Moving on, to analyze, we choose these three companies. The companies that we have chosen are key players in Malaysia's oil and gas industry. They vary from oil refining to logistics and more. That also means that their PPE asset is large and diverse, making it perfect for us to analyze. What are the companies? Firstly, Petronas Gas Berhad, or also known as Petgas. Petgas is the largest gas infrastructure and centralized utilities company in Malaysia. Petgas operations include gas processing, gas transportation, regasification, and more. Petgas PPE includes plant and pipelines, storage units, and other plant and equipments, motor vehicles, to name a few. The PPE of Petgas makes up around 71%, which is a large amount of the company's assets. Secondly is Bumi Armada Berhad. Bumi Armada Berhad is an international offshore oil and energy facilities and service provider company that is based in Malaysia. The company owns and operates large oil processing equipments. Bumi Armada Berhad's PPE includes vessels, office premises, spare parts, and more, all of which are crucial to the company's daily operations. And last but not least is Petron Malaysia Berhad. Petron Malaysia Berhad is the largest oil refining and liquefied natural gas company from the Philippines. Petron made its first and largest foreign investment in Malaysia back in 2012. Today, Petron is the third largest corporation in the oil refining and marketing in Malaysia. Hence, Petron's PPE includes buildings and improvements, refinery and terminal plant and equipment, and also service stations and more.
So let's move on to the relevant MFRS standard. The first one is MFRS 116 PPE. So our selected companies own significant PP assets such as gas pipelines, offshore platforms, and refineries. For example, Petgas uses it to gas pipelines, processing plants, and utility facilities. Meanwhile, Armada uses it for FPSO units and offshore rigs. So under this standard, PPE is measured at cost. Mirror plants are considered as a type of PPE and are subject to the same treatment as other PPE. So it is measured at cost, less accumulated depreciation and impairment. Depreciation is applied over the asset's useful life, and the cost or revaluation model can be used to measure PPE. So the second one is MFRS 136, impairment of assets. So if assets lost value, these companies must perform impairment testing and adjust the carry amount. For example, Petgas must test for impairment if their gas processing plants face operational or regulatory issues. So under this MFRS, if an asset's recoverable amount is less than its carry amount, so an impairment losses will be recognized. Impairment losses must be reversed if there are indications that the recoverable amount has increased. So let's move on to the first company that we have selected, which is Petronas Gas Berhad or Petgas. So this company was established in 1983 and headquartered in Kuala Lumpur. It is listed on the main market of Bursa Malaysia since 1995, and it is a leading gas infrastructure and utilities provider in Malaysia. It was established by Petronas and was founded in 1974 by Government of Malaysia. The key individuals in establishment this company is Abdul Rahman Yaakob, Abdul Taib Mahmud, and Tengku Razali Hamzah. So this company operates primarily in 4 sectors, which are gas transportation, gas processing, regasification, and the last one is utilities. So let's move on to its PP assets. The first one is gas processing plant. So this plant separates gas into its components such as methane, ether, propane, and butane. So it is crucial for processing natural raw gas to meet quality specification before distribution. So this asset is depreciated over the estimated useful life. Secondly, gas transmission pipelines. So extensive network of pipelines transporting processed gas from processing plant into end users across Malaysia. It ensures the efficient and safe delivery of gas to various sectors, and this asset is also depreciated over their estimated useful life. Thirdly, utilities facilities. So infrastructure supports the provision of utilities such as electricity, steam, and industrial gases. So it supports PGB's utilities segment and provides essential services to their industrial customers, and this asset also is depreciated over their estimated useful life. Now I will be talking about recognition and measurement. So PPE are measured at cost less accumulated depreciation and accumulated impairment losses. So under this MFRS 116, costs include purchase price, direct costs, costs for dismantling and restoring facilities, and software integral to equipment functionality, and also borrowing costs for qualifying assets are also included in the cost. So under subsequent measurement, MFRS 116 provides guidance on recognition, measurement, and depreciation of PPE, which covers all the physical assets like gas pipelines, processing plants, and utilities facilities. Petgas follows the cost model, which means that all the assets are measured at cost, less accumulated depreciation and impairment losses. So subsequent measurement involves depreciation and impairment testing, and the carrying amount is adjusted for depreciation and impairment losses. For example, for Petgas, gas pipelines are measured at cost and then adjusted for depreciation and impairment losses. So under depreciation, MFRS 116, depreciation spreads on assets cost over its useful life. Petgas use a straight line method for its physical assets such as gas pipelines, processing plants, and utilities. For example, a gas pipeline costing 10 million with 30 years useful life would depreciate more than 300,000 yearly. In 2023, Petgas reported depreciation and amortization expenses of 474.7 million for its PPE. So under impairment and MFRS 136, impairment testing will be conducted if there are indicators of impairment such as damage or market value changes. If the asset's recoverable amount is less than its carry amount, so impairment losses will be recognized. For example, if a gas plant's value dropped due to new regulations, so Petgas will adjust its carry amount lower. In 2023, Petgas reported an impairment losses of 19.5 million for certain gas processing assets due to its lower recoverable amount assessed. Under the recognition MFRS 116, PPE is then recognized upon disposal or when no future economic benefits from its use or disposal. So any gain or loss on the recognition of the asset is included in the profit or loss in the year that the asset is then recognized. So how Petgas uses the assets to generate income? So Petgas operates Malaysia's Peninsula Gas Utilisation Pipeline System, which transport natural gas to their industrial customers and power plants. So this revenue is earned through stable transportation fees and under long-term agreements. So this model ensures predictable cash flow, which is a common practice in the energy infrastructure industry. For processing plants, Petgas processes raw gas into valuable products like methane, ethane, propane, and butane. So revenue is earned from sales of gas components and processing fee. This enhances the value chain and support Malaysia's upstream oil and gas industry. So the last one is for utility facilities. Petgas provides essential utilities such as electricity, steam, and industrial gases to their petrochemical customers and industrial hubs. So this revenue is earned from a long-term contract that reduce demand volatility.
Let me introduce you to Bumi Armada Berhad, one of the Malaysia's biggest players in the global offshore energy scene. Since 1995, they have been building their presence worldwide, and today they have ranked as the 5th largest FPSO operator globally. Now, what exactly do they do? Think of Bumi Armada as the team behind the big floating vessels out at sea that help extract, process, and store oil and gas. But they are not just stuck in the past. They have also moved into the floating gas sector, helping meet the rising demand for cleaner energy like natural gas. In short, Bumi Armada isn't just riding the energy wave, they are helping to steer it. Now, let's take a quick look at some of Bumi Armada's key offshore assets under their PPE or property, plant and equipment. First up, we have the Armada Kraken FPSO. This is a critical offshore platform that handles the full cycle of oil from extraction to processing and storage, specifically for crude oil. These vessels have a long lifespan, usually between 10 to 25 years, and their depreciation is calculated using the straight line method. And next is the LNG FSU, the floating storage unit for liquefied natural gas. Think of this as a giant floating tank that stores LNG offshore until it's ready for use. Similar to the FPSO, it follows the same depreciation approach and useful life range. And finally, we have the subsea construction vessels. These are like the underwater construction crews used to build, maintain, and support infrastructure under the sea.
especially for oil and gas. Their value also depreciates over 10 to 25 years depending on the vessel type. Together, these assets highlight how Bumi Armada operates across different layers of offshore energy, from extraction to storage to underwater support. Now, let's talk about how Bumi Armada handles the accounting for its property, plant and equipment or PPE. Starting with recognition and measurement, assets like the Armada Kraken FPSO and subsea construction vessels are initially measured at cost, which includes everything from the purchase price to installation and borrowing costs during construction. Meanwhile, the LNG FSU is measured a bit differently as a finance lease where income is recognized over the lease period. Then comes the subsequent measurement. Bumi Armada uses the cost model, which means PPE is carried at historical cost minus depreciation and impairment. No upward revaluation is done. For example, in 2023, both the Kraken FPSO and subsea vessels were impaired due to lower future cash flow expectations. But even after that, their values weren't increased because Bumi Armada doesn't apply the revaluation model under MFRS 116. In short, everything is kept at cost and only adjusted when there's wear and tear or impairment. Depreciation is the systematic allocation of an asset's depreciable amount over its useful life. A common method for calculating this is the straight line method, which spreads the cost evenly. For example, in the case of a charter contract ending in March 2025, depreciation continues as normal even though extension rates may drop by 70%. However, such a significant decline in value can trigger an impairment review. Let's moving on to impairment. Under MFRS 116, an asset is considered impaired if its carrying amount exceeds its recoverable amount. The recoverable amount is determined by taking the higher of two values, the asset's fair value minus selling cost or its value in use. If the conditions that cause the impairment are later resolved, the impairment loss can be reversed. However, this reversal cannot exceed the asset's original carrying amount before the impairment was recognized. Our company utilizes specialized offshore assets to generate a stable revenue streams. The Armada Kraken FPSO processes and stores oil under long-term leases, while our LNG floating storage unit provides flexible gas storage solutions through charter agreements. Additionally, our subsea construction vessels support offshore infrastructure projects through service-based contracts, collectively ensuring diversified income sources in the energy sector.
Hi everyone. Let's start by talking a bit about Petron Corporation. It was originally founded way back in 1933 as the Standard Vacuum Oil Company, or STAVAC for short. Today, Petron is the largest oil refining and marketing company in the Philippines. They operate the country's only remaining oil refinery in Bataan, which has a capacity of 180,000 barrels per day. On top of that, Petron has built a strong retail network with more than 1,900 service stations across the Philippines and Malaysia. Over the years, Petron has gone through a lot of changes, from being a government-owned in 1970s to becoming part of San Miguel Corporation in 1980s. In 2023 alone, they earned 800 billion peso in revenue, showing just how dominant they are in the energy market. With nearly 90 years of experience, Petron continues to become a key player in the region's energy infrastructure. Now, let's look at the type of asset Petron uses to run its business, specifically its property, plant and equipment, or PPE. First, we have the building. These include the office, fuel storage depots, and terminal. They help Petron manage the flow of fuel and product to their many service stations and clients. Next are the refineries. Petron runs two of them, one in Bataan, Philippines, and other in Port Dickson, Malaysia. This refinery processes crude oil into gasoline, diesel, jet fuel, and other petroleum products that we all use. And finally, the service station. Petron has over 1,200 in the Philippines and 770 in Malaysia. These are the familiar gas stations we see every day, but they also sell other items like LPG and lubricants. These stations are huge part of Petron revenue. So how does Petron record and manage all these assets in its accounting book? First is initial recognition. When Petron acquires a new asset, it records the total cost, including anything needed to make the asset ready for use, like installation and even dismantling costs if required later on. Next is subsequent measurement. If they replace a part of the asset, like upgrading a terminal, they'll include new costs in the asset value, as long as it brings future benefit and the cost can be reliably measured. Then there is depreciation. For building, Petron used the straight line method. That means they spread the cost evenly over the building useful life. For refinery, they use something called the unit of production method. So depreciation depends on how much oil they process. And for service station, they also use straight line method. Lastly, let's talk about what happens when assets lose value or are no longer useful. For impairment, Petron recently wrote off some of the older payment terminal at service station because they are upgrading to a newer, more advanced system. These old terminals were not bringing much value anymore, so they recorded as a loss. And when an asset is no longer useful or is sold off, Petron does what called derecognition. That simply means they remove it from the financial statement, kind of like cleaning up your inventory to make sure only useful things are still on the books. Now, let's see how Petron make good use of its asset. First, the buildings. These include office, storage depot, and fuel terminal. By having their teams and operation in one place, Petron can work efficiently. The storage depot help to move fuel in large amount, making sure there's always enough supply for customer. Also, putting this building in smart locations help reduce delivery costs and make it easier to respond quickly to customer need. Next, the refineries. Petron run two refineries in the Philippines and Malaysia. In 2023, they processed nearly 127 million barrels of crude oil, which is 13% of more than a year before. They also turned cheaper products into more profitable ones like jet fuel and LPG, which had big sale increases. Even though oil price dropped, Petron still grew its profit by 6%, thanks to better efficiency and cost control. Now, let's talk about the service station, the places we usually see. Petron has over 1,200 stations in the Philippines and 770 in Malaysia. This station helped boost sales by 15% in the Philippines last year. Petron also improving the station to give customer a better experience like a cleaner facilities, better payment option, and convenience store. The station don't just sell fuel, they also offer other products like LPG and lubricant, which mean more way to earn income. And by placing many stations in a busy area, Petron can serve more people and stay ahead in the market. Right now, they hold about 24.5% of the fuel market in the Philippines. That's the end of our presentations. On behalf of our group, we'd like to say thank you very much for listening. We hope you found our explanation are clear and helpful.